Welcome back. If you're looking for financial confidence, long-term growth, but maybe with some downside protection.
That seems to be top of mind for a lot of people right now.
Exactly. So today we're doing a deep dive based on info from Diversified Insurance Brokers about a specific product, the M&L RetireVantage 10 Fixed Indexed Annuity. It's from Midland National.
Right. And the goal is really just to break it down, understand how it works, and see, if these features actually line up with planning for a secure retirement.
Without getting lost in the weeds, hopefully.
Let's try. So at its core, this M&L RetireVantage 10, it's a fixed index annuity.
Okay.
The basic idea is growth, tax-deferred, linked somehow to market indexes, but crucially without losing your principal due to market drops.
And it offers income options down the line.
Yes, future income
Yeah.
options. And it's pretty broad eligibility-wise, ages 0 to 79.
Okay, ages 0. Interesting.
Yeah.
But let's focus on that market-linked but no loss part.
Mhm.
How does that actually work mechanically?
Yeah, that's key. It comes down to what they call crediting strategies. Basically, different ways interest might be added to your annuity.
Might be.
Well, it depends on how certain market indexes perform. You've got choices here, options that look at index changes annually, monthly, or even over a 2-year period, point-to-point strategies.
Which indexes are we talking about?
There's a mix. You've got the S&P 500, which most people know. Then there's the S&P MRRC 5% ER.
Okay, less familiar, maybe.
Designed for lower volatility.
Yeah.
Also, the NASDAQ 100 VC 12%, the Fidelity Multi-Factor Yield 5% ER, and something called the S&P 500 Dynamic Intraday TCA Index.
Wow, quite a list.
It gives options. So the idea is if these indexes go up, you get credited interest based on the specific strategies rules, maybe a percentage of the gain.
But if they go down?
If the index drops, you typically just get 0 interest for that period, for that strategy.
Yeah.
Your principal, your earlier gains, they aren't reduced because of that index drop.
So that's the floor. 0's the floor for index performance crediting.
Essentially, yes. Now, there are also enhanced participation strategies aiming for potentially higher upside, but those come with a fixed strategy charge.
Okay, so a trade-off there.
Huh.
But back to the core idea. If the S&P 500 climbs, my annuity value might climb too, linked to that gain somehow. If it plummets.
Your base annuity value doesn't plummet with it. It holds steady based on that index performance.
Got it. And you mentioned annual and 2-year options locking in gains.
Right. So say you have a good year, interest gets credited. That interest becomes part of your annuity's value. The next year or next 2-year period, you're starting from that higher value. So gains can compound without risking giving back prior credited interest in a bad market year.
That makes sense. It avoids that roller coaster feeling a bit.
Especially important maybe closer to retirement when you have less time horizons.
Makes sense.
Yeah.
What other key benefits should people know about?
Well, the tax deferral is a big one. Your money grows without annual taxes on the gains. That tax bill only comes due when you actually withdraw money.
Which could be years later, potentially in a lower tax bracket.
Potentially, yes. Also, there's usually some liquidity this one allows, taking out up to 10% of the accumulation value each year after the first year without surrender charges or MVA.
Okay, so some access if needed.
Yes. And, interesting feature, a nursing home confinement waiver is built in, no extra cost.
Really? How does that work?
Typically, if you meet the conditions, like being confined to a qualified nursing home for a certain period, you might be able to withdraw more money without facing certain charges. Details matter, of course.
Naturally. And the death benefit.
Standard stuff here, generally.
Yeah.
Beneficiaries get the annuity's value, usually the greater of the accumulation value or a guaranteed minimum surrender value.
Okay, now let's talk restrictions or things to watch out for. You mentioned surrender charges.
Right. This is a long-term product. It has a 10-year surrender charge period. If you pull out more than the allowed 10% penalty-free amount during those first 10 years.
You'll likely face charges.
Yes, surrender charges, which decrease over time, and also potentially a market value adjustment, or MVA.
MVA.
It can increase or decrease your surrender value based on changes in the interest rate environment since you bought the annuity. It applies during the surrender period on withdrawals exceeding the penalty-free amount.
Okay, so that 10-year time frame is pretty important.
It is, though there's also something called a true-up feature at the end of the 10 years.
True up.
Sounds positive. It could be. Remember those enhanced strategies with a charge. If, over the 10 years, the total charges taken were more than the interest actually credited from those strategies, Midland National could refund the difference.
Oh, interesting. Like a potential clawback of charges if things didn't perform as hoped.
Sort of, yeah. Also, there's a guaranteed minimum value. It ensures you'll get back at least 87.5% of your premium, minus withdrawals, grown at a minimum interest rate specified in the contract. It's a baseline guarantee.
Okay, so you've got the growth potential, the protection, tax deferral.
Yeah.
How do you actually turn this into income eventually?
Good question. When you're ready, you typically annuitize. The M&L RetireVantage 10 offers several guaranteed income options.
Yeah.
You could choose payments for your life only, or life with a period, certain meaning payments continue for at least, say, 10 or 20 years, even if you pass away sooner.
So payments could go to a beneficiary then.
Exactly. There are joint and survivor options covering 2 lives, usually spouses, or you could just take payments for a fixed amount of time or until a certain amount is paid out. Lots of flexibility there.
And speaking of flexibility, what if my needs change or my market outlook shifts during those 10 years or even after? Can I change those crediting strategies?
Yes, that's usually possible at certain times, typically on the contract anniversary. You can reallocate your money between the available index strategies or the fixed account option.
So you're not stuck with your initial choice forever.
No, you have the ability to adapt, which is definitely a plus.
Okay, so wrapping it up then. This annuity seems to be trying to strike a balance, gets exposure to market index upside,
While protecting your principal from index downturns.
plus the tax deferral benefits and various ways to eventually draw income.
That's the core package, yes.
Ah.
Growth potential, security features, tax advantages, income options.
So for our listeners thinking about their long-term plans, maybe the question is, how does something like this blend of growth potential and that downside protection, fit into your bigger financial picture?
It's definitely a conversation worth having, considering how fixed index annuities might play a role in achieving retirement goals with perhaps a bit more confidence.
Food for thought. Thanks for breaking that down.
My pleasure.